Welcome to the Bigger Cash Flow podcast, where we interview business owners and real estate investors that share tips and tricks on how to grow your cash flow and reach financial freedom.
What's up, you guys? Welcome to another exciting episode of the Bigger Cash Flow podcast. Thanks for joining us for part 6 of buying your first rental property. Now, this is going to be the second to last step. Next week, we're going to be covering managing and scaling your rental portfolio. But if you haven't checked out the previous episodes, I highly encourage you to do so as it relates to goal setting, finding your market, finding a contractor, property manager, broker, as well as a financier for your rentals, as well as analyzing your rental property. Now, I'm going to focus on what happens after you go ahead and write an offer. You submit an offer, whether it be to a broker, directly to a seller, or a wholesaler that you are interested in buying a purchased property from. Now, what happens after you have an accepted offer? So let's just say you're buying from the MLS. You're going to be working either with the seller's agent or you're going to have your own buyer's agent submit an offer for you. There might be a back and forth negotiation process, but let's just say the seller has accepted your price. And for the purposes of this discussion, let's just say it's a rental property worth $100,000 in the Midwest, and they have gone ahead and accepted a full priced offer. Now you're responsible, the clock starts ticking. You're going to have an estimated closing date, typically 30 to 40 days from the acceptance of the contract. And you're also going to have some language in there as it relates to the earnest money deposit, your inspection period, your appraisal contingency. So those dates are going to be very critical for you to keep in communication with your buyer's agent as well as the seller to make sure that you are on track to close. So one of the first things that you definitely want to do is prepare the earnest money deposit. Now, for some of these wholesalers, they might have a flat $500 or $1,000, $2,000 per property. And you got to read the fine print. Some of these wholesalers these days are writing in disclosures saying this is non-refundable. I personally do not operate that way. I personally feel like there should be a chance for the buyer to inspect the property. Now, I think most of these wholesalers are doing this to kind of weed out and filter out the tire kickers who might waste their time, because this is a business. But you might want to make sure that you're working with more seasoned professional wholesalers who aren't trying to make a living off of keeping these earnest money deposits. Because let's just say you have 100 buyers, and if they're submitting these earnest money deposits, they're non-refundable, then if that's how they make their living, then it's not a good sign. So you want to make sure that you're working with wholesalers who are allowing a refundable earnest money deposit. And that's just me. So you're going to go ahead and send that out. Or if it's a standard sale through the MLS, it's going to have language in the contract that says, hey, this is a refundable earnest money deposit. Typically, it might be anywhere from 1% to 3% of the purchase price. So let's just say for a $100,000 purchase, it's going to be $1,000 earnest money deposit, $2,000, whatnot. You're going to send it directly to the title company, and they're going to put that in the escrow account. So there's going to be a couple contingencies to protect you and make sure that you get that earnest money deposit back in case, let's just say you have a 10-day inspection period, or you have an appraisal contingency. So it needs to at least appraise at a minimum for what you're purchasing it for. So that, the seller might think it's worth $100,000, but if the market doesn't warrant that, it's only worth $90,000 based on the neighboring comps. Now, remember, we're talking about residential, single family, 2 to 4 unit multifamily. So you're not going based off the income, you're going off of the market prices. So if it appraises at $90,000, you have couple options. You can either bring $10,000 to the table because you're financing it and the lender's not going to go higher than $90,000 ARV, or you can ask for a price reduction, and that's going to be you just negotiating with the seller at that point. So those are some of the contingencies you definitely want to have to make sure that you are protected. After you have submitted your earnest money deposit, now you're ready to go ahead and order an inspection. So ordering a third-party home inspection is going to be very critical in your due diligence process. Now, how do you go about finding a home inspector? For me personally, I just reach out to different investors that I know. I also check Yelp, I check, Bigger Pockets as well as other Facebook forums, and I try to see who the common inspector is being used for investment property perspective. So remember, I'm not looking for a primary residence. I'm looking for a rental property. So there's certain things that I want to look at. I want to look at the mechanicals, electrical, plumbing, roof, foundation. Those are my main areas of concern because number one, the cosmetic stuff, I don't care if, maybe a tile is chipped or if there's some paint that's cracking. More likely than not going to rehab a lot of my properties. Now, if you're buying turnkey, that's different. You do want them to pick those up so that you can go to your turnkey provider and either ask them to remediate it or reduce, give you a credit at closing for those items that you need to take care of. However, for all intents and purposes, if you're buying straight from the MLS, just buying a rental property, you want to get a home inspector that understands rental properties, in my personal opinion. And you can go through any of the big forums or Yelp or look at the inspectors that other investors are using. And then once you get a short list, go ahead and call them. And most of these guys will have sample reports. So let's just say, John and Jane Doe, they're both home inspectors and they both charge $350. Well, they might have a sample report and you like the way that John lays out his information, takes the pictures. Maybe Jane has it like a different way that it's not, I guess, more meaningful for you in terms of interpreting the data or whatnot. So you go with the inspector that you're most comfortable with after you kind of create that short list. But in my experience, whether it be Kansas City, Indianapolis, or Little Rock, there's only a handful of home inspectors that a lot of investors use. And if you use one of them, I don't think you're going to have too big of an issue. Now, home inspection reports, typically they cost about $300 to $350. And this is just for the base report. I'm not talking about any special type of sewer scopes or mold, termite, radon, those types of additional inspection reports. They could add like $75, $50, $100 on top of that for each specific testing. And this is for single family. For multifamily duplexes, typically I've seen them add like $100 a door. So if it's base price like $250 to $300, if it's a duplex, maybe it'll be $450. Or if it is a 4-unit, maybe they'll charge like $575. So it's really going to scale up with the number of properties because obviously a quadplex, you're going to have 4 furnaces, you're going to have 4 AC units. You're going to have more things that they need to check up on, 4 sinks, kitchens, and things like that. So once you have gone ahead and ordered the home inspection and your buyer's agent should be able to coordinate all for you, that's why they're getting paid. So you don't have to make all those calls and set it up. A good buyer's agent will be able to coordinate all those things for you. Now, once you have received that report back, typically you'll get it back in 24 to 48 hours after the inspection has been complete. Please keep in mind that on the contract, if it says 10-day inspection or 14-day inspection, you do have to respond back to them, either asking for a price reduction or, okay, you're going to sign the waiver, you're okay with the condition of the house, or asking for a credit, anything like that, or repairs. You do have to respond in that allotted time. Now, once you get the inspection report back, you're going to want to take a look to see if you think there is cause or justification to get any additional testing done. Let's just say a general home inspector, they might not be a pest and termite inspector. They might not have that specific license. But let's just say they see evidence based on the thousands of homes they have inspected. They see evidence of some termite damage or some rot. Or maybe they see some evidence of mold. Or they recommend that the main sewer line gets scoped. So at that point, it's really up to you if you want to order that additional inspection for peace of mind. Please note, in the bigger picture scheme of things, you're buying a $100,000 to $300,000 asset and paying $200 up front to avoid $7,000 to $10,000 in repair down the road. It's not that big of an expense in the big picture scheme of things. Now, based on your risk tolerance and your experience, maybe later down the road, you might be able to forego some of this. But at a minimum, I highly recommend that you get your home inspection done and then go ahead and do the other ones based on your risk tolerance and how comfortable you feel. Now, I personally do main sewer lines for a lot of my properties because just the types of homes that I'm buying in the Midwest, I've seen maybe tree roots get into the main sewer line, or there's some warping, or maybe it's a clay sewer pipe that might collapse. And maybe it's not fully collapsed, it's just partially collapsed. So it doesn't seem like it's clogged up or there's an issue right now. But then maybe a couple months down the road, you're going to have that issue. Now, to remediate some of that, it could be maybe, in my estimate, for some of the quotes that I've gotten, it's as cheap as $3,000, but it could be as expensive as $7,000, $8,000. So it's definitely worth doing that $150, $200 inspection. And then if there are any issues that show up on the camera video, then you go back to the seller and say, hey, I have this issue. Just be transparent with them. I have this issue. What can we do about it? I really like the house. Both of you guys have time invested in it. And if I'm the seller, if you're coming at me with this issue, more likely than not, the next buyer is also going to raise this as a concern. Unless the price is so low below market that it has already factored in this cost, you are definitely within your right to ask for a price reduction or some sort of credit. So, it never hurts to ask, and the worst they could say is no. So you definitely want to check that out, and that's something that I always do. And based on my experience, I've probably saved at least $10,000 across a couple properties where I had to go back to the seller and ask for that credit. Now, in the general scheme of things, what happens if your inspector finds any problems? If there's any defect, it really depends on the significance, in my opinion. Any, structural problems, plumbing, electrical, any roof or mechanical like AC units and furnaces, those are your big dollar items. So those are the ones you want to go back to the seller and either talk to them to renegotiate or see what you can do. But very minor things, chips and cracks or breakers that you need to replace, things like that don't cost that much. If it's a couple $100, then I would direct the conversation and focus on the big ticket items. Okay? Don't sweat the small stuff because that's to be expected. That's why we have maintenance and CapEx reserves. And, it might be depending on the market. If it's really a seller's market and there's so much competition, they might just say no. But if they're really in distress, they need to sell the home quickly. Maybe there's a death, illness, divorce in the family, or they just want to exit and retire. You never know the motivation of the seller, and you never know until you ask. So if they are really motivated, they're going to be willing to work with you. If they're not, the worst case, they say no. And if you're not comfortable at that point, you just walk away. That's why there's a contingency in place for inspection. That's why you have those $300 inspections. It sucks to lose that money, but you may have saved yourself from a couple $1,000 headache. So at that point, if they're not willing to work with you and you're not comfortable, then you just move on. You walk away and you move on and you do another property. Okay? So just to recap this conversation, the steps are you're going to write an offer. There's going to be some back and forth negotiation. And once the offer has been accepted, you're going to go ahead and submit your earnest money deposit. You're going to go ahead and order a home inspection from a qualified and licensed professional. Definitely ask around for recommendations. And then you're going to reach out to your insurance agent that you have already contacted and built a relationship with. Now you're just filling out a form and say, hey, I found my property. So you've already understood if you want actual cash value or replacement cost. You understand if they insure certain types of homes, so that you're not scrambling and wasting any time once you have an accepted purchase agreement. Okay. Next, you also want to review the title report. The escrow company is going to send you a title search. So you want to take a look at that to understand if there's $3,000 in back taxes that you didn't know about. Is the seller going to pay that off at closing? It should also be written on the purchase agreement if the buyer is responsible versus the seller, but you also want to confirm all of that information. Is there any encroachments or anything wrong with the zoning, the property lines? Is all of that verified? You want to make sure that, hey, you thought you owned the lot behind that house, but it turns out that somebody else owns it, or you thought it was zoned commercial, but it's residential, or vice versa. All of those information is going to be key. You also want to understand if there are different types of liens on the property. Maybe there's some contractor's lien who may have done work for the seller or the previous owner as well, and they haven't gotten paid. You want to make sure all of those liens are wiped out when you buy the property. If you're looking for insurance coverage for your rental properties, the company that I trust is Ross Diversified Insurance Services, a national insurance agency that has been providing insurance coverage for real estate investors for over 30 years. Whether it's a rental or a fix and flip, Ross provides you coverage through A-rated insurance carriers to provide you with competitive rates, as one size does not fit all. Check out biggercashflow.com/RDIS to get your free quote today. When you're purchasing your first property or the next, you want to work with an experienced lender who's got your best interest in mind. Sean Huss at Chemical Bank has been a professional in the mortgage industry for over 25 years and has helped hundreds of investors like you and me grow their rental portfolio. With expertise in areas such as real estate sales, title and escrow, and the mortgage closing process, Sean is able to provide comprehensive counsel to guide you throughout this often complicated process. Check out biggercashflow.com/chemicalbank to get pre-qualified for free when you mention the Bigger Cash Flow podcast. So definitely review the title report. Next step is then to get approved for the mortgage, and typically it's 2 steps. They're going to underwrite you. So you're already pre-qualified. They're going to ask for pay stubs, bank statements. They're going to run a credit report, a hard inquiry on your credit. Then they're going to ask for arm and a leg in terms of all this documentation. Trust me, everybody goes through it. If you want to get the best terms and rates as it relates to Fannie Mae financing or Freddie Mac, you do have to go through that rigorous underwriting process. But once that's done, the final thing will be to get an appraisal. And as long as it appraises for what you're purchasing it for in as-is condition. If they say subject to these repairs, then it's an issue, right? Because unless the seller makes those repairs, it's not going to be valued at $100,000. But if the appraisal report says it's worth $100,000 as is right now, then you're good. So once that's done, then you're going to sign off the waiver on the appraisal contingency. Then you're looking at a clear green light to close. So the title company is going to send you the closing documents, including the settlement statement, and it's going to have a breakdown of what you're buying it for, all the different fees and costs that we talked about on the previous episode, and how much money you have to bring to the table. So it should be pretty much in line, plus minus 10% of what you were expecting when you were first underwriting the property and documenting your pro forma. So if you're doing 20% down, you're putting 5% for closing costs, as well as some of the other types of fees that are involved. That should be what you're expecting on that settlement statement. If there are any heavy deviations or discrepancies, definitely reach out to the escrow company or ask your buyer's agent to inquire about each of those line items. Next, then you're going to have to set up with either a mobile notary or go to escrow to sign the actual documents. And as you're kind of getting ready, like a day or two before that, I think this part is really crucial, even more so than a day or two before the actual closing, maybe even like a week before. You want to reach out to your property manager and say, hey, this property I'm going to be closing on X and so date. So please be prepared to take on the keys. I want to hit the ground running. If it's already in rent ready condition, you got to make sure that somebody goes in there right away, takes photos and lists it, because time is money. And if you close on a Monday and it takes them a week to go out there, you just lost a week's worth of rent, right? But if you would have told them a week in advance, they can get somebody ready once you close on Monday. Maybe as late as Tuesday, they'll have somebody out there taking pictures. Or if you are doing some value add rehab to the property, same thing. You got to get your contractors lined up. You got to let them know. Sometimes it doesn't work as perfectly. Maybe they can't go that same day right after you close, but you can try to close the gap as much as you can so that you're not leaving money on the table. You want your contractors to start the demo right away and get their people in there, put a down payment on the windows. Custom windows take a long time. Replacing your roof, it depends on the weather. There's various other factors outside of the interior cosmetic stuff that you have to account for. And every time there's a delay, okay, windows are taking 6 weeks, or there's a lot of rain, so we can't do the roof for another 3 weeks. Those are all going to add up. So you want to make sure that you line it up, set expectations with your contractors, and hit the ground running as soon as you close. So once that is all set up, you sign with the notary. Congratulations, you have bought your first house and you are ready to start managing it. If you have a third-party manager, you're going to be still managing the manager. I would always say scan all of your documents. You don't need to have these paper copies, in my opinion. If you have additional paper copies, put it away in a filing cabinet. But all of these scanned copies and receipts, these are going to be critical for you to calculate your tax basis when it comes to tax time. You want to make sure you have all these receipts so you can expense those costs as it relates to your rental property. And then you're going to be doing your bookkeeping, whether you use Stessa or QuickBooks, Propertyware, or other sorts of third-party property management software. You definitely want to set it up in the get-go so that you aren't scrambling a year from now, inputting all your transactions and just flustered when you're trying to do your taxes. So we're going to cover a little bit more of that in next week's episode in terms of managing and scaling your rental property. But hopefully this was really helpful, giving you a step-by-step action plan on what you should do after your property offer has been accepted. Making sure you do your due diligence, check the property, send somebody out there you trust. You're sending multiple people. You're sending your buyer's agent. You're sending your contractor. You're sending your home inspector, a third-party appraiser, maybe other investors who are local to the market if you're 2,000 miles away. So you're basically sending 3 to 5 people at a minimum to check on your properties. And if there are any differences on what these guys are telling you, then you need to go research it. Ideally, you should be flying to your markets every so often, at least once a year, to check on these properties yourself and align those expectations. But maybe physically you can't do that and you have to manage it from afar, long distance real estate investing. If you're having, 3 to 5 individuals go and verifying the facts and checking those informations, you're going to be able to minimize your risk significantly rather than trusting just 1 or 2 people and taking their word at face value. So definitely do your due diligence, protect yourself, and it's better to be safe than sorry, especially in the beginning when you're still learning. Don't try to be penny wise and pound foolish, trying to save a couple $100 and then end up burning through thousands over the long run. So please join us next week for the last part of a 7-part series in terms of buying your first rental property. Hope that was really helpful for you guys. Please do me a favor and leave me a review on iTunes. We'll see you right back here next week for another exciting episode of the Bigger Cash Flow Podcast. Thank you for listening to the Bigger Cash Flow Podcast. Please remember that opinions of the guests are their own, and nothing on this show should be considered personal or professional advice. Please consult your tax, legal, or financial advisor for personal advice that fit your unique situation. See you next time.